Welcome back, everyone, to the last and final session. For those of you who weren't here yesterday during my talk, I'm Ingo Weber. I'm a professor here at TU Munich as well. Great that you all stayed around for the last session. We saved the best for last, maybe. You'll be the judges of that. So I'm excited to learn what will happen with the digital euro, and take it away, Lars.
Thank you. If I had a digital euro for every time someone had asked me when the digital euro is going to come. Right, so this is a bit of an odd one out, the talk, because this is not a presentation of academic work, it's more of a progress report. And just as a start, as a notice, the digital euro is an initiative by the European Central Bank. I do not work for the European Central Bank, but we are close observers of what's happening. What I actually am is chief evangelist at the company called Giesecke+Devrient. If you're not German, you feel free to abbreviate it with GND. And GND, what do? We are a security tech company, and we're literally in your pockets. So either you have a banknote that's printed by us, or you have a SIM card that was invented by us, or you have an iPhone that contains an eSIM that's managed by us. So, or maybe passports. We also do passports, so a lot of these things. And we also do digital payments. In particular, we're engaged in the field of CBDC, central bank digital currency. And the digital euro is one specific instance of a CBDC. Now, let me just update all of you what CBDC actually means. And for that, I need you to forget everything you know about blockchain, because for the next 20 minutes it's actually not gonna be talking about blockchain. We are here at the TUM-CBDC salon, not the blockchain salon. On the left side here in this Venn diagram, you see banknotes. And if you're in Germany, you probably use them quite frequently. If you're not in Germany, you probably have used them last time 20 years ago. Banknotes are physical objects that you can use for making payments. And the key thing about banknotes is that you can have them as a random citizen. So you don't need to be a business to have them. Anyone can have them, even children. So you don't need a bank account or anything. And they're issued by the central bank. So even if you have a bank account and your bank goes bust, the banknotes that you have in your pocket, they're still going to be good. On the right side here, in this Venn diagram, we have bank deposits and e-money. So for example, if you have a bank account at Deutsche Bank or at Citibank or something like that, that is already somehow digital money, because you can access it, for example, using a mobile app. You can access it through your online banking, but it's not issued by the central bank. It's a liability between you and your bank, right? So it's not universally accessible. In particular, children cannot use it. You cannot give your child a credit card, even if your child wants a credit card, very bad, but you can't, it's not possible. So the idea is, we want to look at here what's in the middle. So we want to create a new instrument that is digital and universally accessible, that is issued by the central bank, and that is CBDC, central bank digital currency. So it's gonna be a payment instrument that can be used in basically all payment scenarios, that can be used by citizens and does not necessarily need a bank to clear and settle the transaction. Why is this an interesting topic? 90% of central banks worldwide are actively engaged in CBDC work. And that's quite a big number. Quite a small footnote to this. What I just described to you in the previous slide is what is referred to as retail CBDC. Retail because it means you can use it for retail business, so if you can buy stuff and it's accessible for citizens. There's also another type of CBDC that's called wholesale, which is used for big enterprises and fintechs and financial institutions and interbank settlement. So both of them are included in this number. So this 90% refers to both retail and wholesale. The digital euro, what I'm specifically going to talk about, is going to be a retail CBDC, so not a wholesale CBDC. The other figures are also quite interesting. So 62% of central banks are experimenting with the design and technology, and another 26% are already deploying pilot projects, so where they're actually testing it out. And we speak from experience because we've already collaborated with a bunch of central banks on these pilot projects, for example, with Bank of Thailand, where we've done quite a successful CBDC project, or the Central Bank of Eswatini, and if you know where Eswatini is, you get a cookie. Right, and around 70% of central banks worldwide say they are likely to introduce the CBDC. It doesn't say a time frame here. So some of them are saying like they are likely to run it, introduce it within like the next 2 years, some of them next 4 years. And this is also quite different depending on the continent. So for example, we see in Africa and Asia a strong appetite to do it rather today than tomorrow. Whereas Eurozone and for example, the United States, they're more reluctant. But they also have sometimes much more established economies, larger economies. So you can't just disrupt that entire economy. So you need to do a bit more careful planning. So the details are of course subtle. Every country has their own motivations, but this is just a very broad stroke here. Now let's zoom in on the Eurozone, digital euro. Who of you here has heard of the digital euro before? Okay, so I would say that's most people. It goes way back. So the first major publication, or one of the major publications, is from October 2020, which is called Report on the Digital Euro. And of course, they have done research before that. So it's not just like, they did not just think in 2020 we should work on that. So they already did a lot of work before that. And this report is actually quite significant because it outlines some points of what the digital euro should be, and those points are still valid today. So even 4 years later, almost 4 years later, this is still what they're doing. So what's the first point? Let's take a look. Central bank liability in digital form. Now, I've tried to explain this briefly. If you're not an economist, don't worry. Central bank liability means it's a thing between you and your central bank, like a banknote, right? So there's no intermediary in that sense. Like if you have it in your wallet, it's just a valid thing, right? So there's no need for you to go to a bank to redeem it for something else. It's directly money. Point 2, used by citizens and businesses. I think on the business part, they walked a bit back. So it's not supposed to be used between businesses. So you're not supposed to do B2B payments with the digital euro, but you can use it to pay a business, right? So if I go to a shop, to a grocery store, whatever, I can use the digital euro to make payments in the same way I would be using cash or, for example, credit cards today. Or also in online shopping, for example, could also work. A third point, focused on retail payment needs. So again, we're not trying to solve every single payment situation here. Retail payment also includes something like peer-to-peer. So for example, if I want to pay a friend after we have shared a meal, then this should also be possible. But it's not necessarily the case that you want to do, like, for example, cross-border remittances from day one, right? So it's much more focused on like the domestic retail use cases here. Not saying this is never going to come, right? But it's just what the focus is on today. And the fourth point, and just really important, complements cash and deposit money. So it's not supposed to replace it. All of these things are still going to be there, and all of them are still going to have the use cases. It's just one more option that is given to citizens. Now, what's the timeline, right? So everyone here might want to know when it's going to come. So there's 3 broad phases that the ECB has outlined. The first phase is already completed. It's the investigation phase, and well, what the name already says, for investigating if the digital euro would be feasible and what it could look like. And one of the outputs of that investigation phase was already a broad architecture, a rough architecture of what the different components would be, and the definition of use cases, some technical exploration. A lot of proof of concepts were done. For example, there was a proof of concept with Amazon, I think, to test retail payments. I think it was Amazon. They also did a proof of concept with some POS terminal, point of sales terminal vendors, to see how offline payments could look like and so on. So a lot of different vendors, a lot of different proof of concepts, and then after that they decided, yes, it is possible and we want to move forward with this. The next phase is where we're currently at, the preparation phase, 2023 until 2025. The next item in this preparation phase is going to be the tender, and I will talk a bit about the tender in a moment. But basically, it's not time to procure the components for the digital euro, to actually check out concrete vendors, what they can provide. But it's also about defining a scheme rulebook. So that means, for example, defining how much money should be in your wallet at most, right? So if you have, for example, the ability to do private payments, and it's going to be very clear that there's going to be the ability to make private payments between friends, for example, it would be a terrible idea if you could make private payments of arbitrary amount, right? So maybe making a digital payment of 100 million. That would be money laundering. That would be paradise for money laundering. So this should not be possible. So basically, one of the questions here is how will these limits gonna look like? Is there some kind of refunding option if you make a retail payment and the merchant is gonna pay you back because you return the item? All of these kind of small things that are actually really important in practice. That might not be so interesting technically, but they're really, really important. And then the next phase is, of course, they just call it next phase. This is literally from their presentation. And we could also call it like implementation or rollout phase. But the rollout will not start in 2025. I think that's fairly clear. Now, I have one more slide on this legal aspects, on this regulatory aspects. There needs to be a legal framework, definitely, because as of today, most central banks do not actually have the legal mandate to do a CBDC, so they're perfectly capable of doing proof of concept. But as soon as we're talking about real money, then this is going to be a challenge. So there's a draft regulation of the European Parliament and of the Council on the establishment of the digital euro that came out last year already. And yeah, this is currently under discussion in the European Parliament. There are some amendments being discussed, for example, and there's like stuff like the holding limit, for example, is there, but also things like the compensation model. So, for example, if banks are going to be involved, and I will mention this in a moment as well, who's going to get a transaction fee, for example, and how much is the transaction fee going to be? Do merchants have to accept have to accept this legal tender and things like that? So all of this stuff goes in there. And just as a side note, there's a second piece of legislation which has been introduced at the same time, which actually reiterates their commitment to cash. So the ECB says we want to do the digital euro, but we still want to do the analog or euro as well, right? So this is actually fairly important, and they've been very clear about that they do not see this as a replacement for cash, but only as a complement to cash. All right, so let's take a look at this more concretely. What the wallet's going to look like? What's the ecosystem going to look like? And I'm going to show you a quote now because I like it a lot. Currency cannot be private. Money is a public good of sovereignty. Anyone knows the person? Except my colleagues. So this is the head of the French National Bank, and I think this underscores quite nicely what they want to do here. They were really talking about public utility here, and there's basically three aspects that we can talk about. First aspect would be the creation. So who's able to create the digital euro and who's allowed to like bring it into existence. Second aspect would be the distribution. So how does the digital euro get to the consumer or to the business? And then, of course, third aspect would be the usage. So how can we what can we do with it? How can we make payments? And this is very strongly modeled also after the traditional cash cycle. So if you talk about cash, you have exactly those same questions, right? So who can print the cash? How does the cash get from the printer to the user? And then what can the user do with the cash? And then maybe also how does it return, something like that. So, but this is very, very similar to the central bank analog currency, if you want to, the CBAC. Right, and of course, there's also going to be some guidelines about this. Not all of this, I will say now, is completely fixed as of this point. So some of that, what I'm telling you, are educated guesses, but some of it is also known. So some of it has already been published by the ECB that this is what they're going to do. So one thing that's fairly clear is that the ECB will not deal with users directly. So for some of you are German citizens, I assume, you do not have to go to the branch of the Bundesbank in München to get an account there. That's not what's happening. So you would be able to obtain the digital euro through intermediaries, for example, through banks. But it could also be possible that some European countries will say, well, maybe there are some areas in our country where there's not a lot of bank branches. I mean, this is also a problem that affects Germany. So maybe you can also go to the next post office to convert some cash, for example, into digital euro, and you can get a wallet from the post office. Or you might also be actually able to get a wallet from the government in certain circumstances. So all of this is perfectly possible. We don't know yet which intermediaries will be in the list, but banks will be in the list, and there could be some other intermediaries as well. Second point, we've heard about smart contracts today, but I'm going to have to disappoint you. The digital euro will not be programmable. And this is for a very good reason, because cash is always tradable at face value. It is never possible to say this banknote can only be used for certain, under certain circumstances, or maybe it expires after 2 years or something like that. That's not possible. And it's not supposed to be possible because you want to have a currency. You don't want to have something that's encumbered with conditions like that. So smart contract capability is almost certainly not going to be in the core of the system, yet intermediaries may provide additional services. So intermediaries may allow you to program something in your wallet, but that will happen at the wallet, at the intermediary level. It will not be happening at the core level. And there's obviously also a political point here, right? So some people are rightly very concerned about an ECB that could potentially tamper with the value of the money, but they are saying this is going to be in the legislation, right? So that they can't do that. So I'm very happy about this. Third point is legal tender without interest. So legal tender means I can use it for basically any purposes, and I will not be getting any interest payment on it. So it's not reasonable for me to like have large buffers of it around. If I want to save money, then I bring it to the bank or invest it or buy whatever else, some other asset, but I'm not going to use that for my retirement money, basically. Digital euro. And finally, and this is, I think, maybe from a technical perspective, the most interesting point, payments can be conducted offline. So even if there's no internet connectivity, I should still be able to make my payments. How am I on time?
Yes, so if you could wrap up in the next 2-3 minutes, that would be great.
Okay. So just as a general overview, I might be in a position where I have one or multiple devices, one or multiple wallets. A wallet device could be, for example, my smartphone, but I have some more examples. And in there I have somehow 50 digital euro. Then I can do a bunch of things with it. As I already mentioned, I can do, for example, a person-to-person payment, and that could be both online and offline. So you could have like a PayPal-like experience where I'm typing in someone's phone number and so I just want to transfer 20 euros. Or I touch two devices together, for example, and then it would make the payment through NFC. Or second option, I can make this payment at an online shop. So that would also be something similar like today, where I, for example, type in my credit card number and then it somehow gets drawn from my account. Or third point, I go to a physical merchant and then I can also do online and offline payments. Right. So in terms of the actual tender, I promised I will talk about this for a second. There's one big component in the middle, which is the settlement component. Of course, that would be the technically most interesting. But again, I have to disappoint you because we don't know yet what this is going to look like, because ECB is going to develop it themselves. And they have not come out yet with the specifications about this. So we know that it's going to be a settlement component that needs to transact at least 50,000 transactions per second. Something like that, maybe 30,000, maybe 60,000, but something in that order. And it might be an account-based system, might not be an account-based system, we don't know yet. But it's fairly central, and then there's a few things around that will actually be tendered for companies to bid on that. One component will be alias lookup, so something like being able to find friends, being able to find people by just typing in an email address. And of course, this needs to have privacy baked in, so it should not be possible for the ECB to just have a big database of everyone's phone number. That's not what they want to do. Another component is, of course, mobile app and SDK. I think that's fairly self-explanatory. You want to interact with it on your mobile device. Third point, secure data exchange. That's a bit obscure. Basically, this is you can think of it as like integration into existing card payment systems. So you should be able to tap and go, and then it's kind of like you have a POS terminal that accepts the digital euro, and there's some kind of secure exchange without like a possibility for someone to draw arbitrary money from your wallet. That's I'm not doing a very good job explaining this, so it's a bit of an obscure one here. Fraud and risk management, of course, that's clear. So you want to ideally avoid a situation where people can steal lots of money by just pretending to be someone else. So you don't want that. And then the offline component is also going to be in the tender. And of course, from our perspective, the offline component is the most interesting one because we have a CBDC product. So quick commercial break here. We have a CBDC product that is also focusing on these offline payments. And maybe if I can show 2 more slides, I will quickly explain what we mean with these offline capabilities. One analogy that I like to use, or that we like to use in our company, is like Netflix downloading movies or Spotify downloading songs, right? So you want to be in a situation where you can still do the stuff you like, even if you're in a train. Or if you're hiking up the Alps and there's no connectivity. So Netflix allows you to download films, Spotify allows you to download songs, and then you can still listen to them, watch them. And the same should be true for the digital euro. You should be able to somehow download it to your device, and then you can transact. And the key thing is, let's say I want to pay €5 to my colleague Markus, and then Markus is offline, and then he takes that €5 and pays my other colleague Abbas, and then he takes these €5 and goes to the merchant. So even these consecutive payment chains should be possible. And there's a whole bunch of ways this can be made to happen. So for example, there could be some app on the phone that stores the CBDC, the digital euro offline, but there's many other form factors that are also being explored. For example, good old smart cards. Good old smart cards that would not work like credit cards, because credit cards are credit. CBDC is actual currency. So you can store the tokens, the digital euro tokens, then here physically on that device. And of course, if you lose the device, your money is gone, like with physical cash. On the plus side, no one would be able to trace it because it behaves like physical cash. Or all sorts of other devices. So you could think of putting the tokens also on wristbands or on rings or something like that. So all of this is possible. And of course, there should be some kind of way of paying at the existing POS terminals. So the ECB does not want everyone to use new devices. It should somehow feel familiar. Okay, I think I'll close at this point. I'm sure there's lots of questions, but I'll also be around afterwards. So if you have more questions, yeah, that's it.
Okay. Excellent. Thank you very much. Very entertaining way of presenting money. So that's awesome.
Message received.
I mean, has anybody been in an economics lecture that was this entertaining? So well done. Sebastian.
I would just have a quick question, maybe a bit provocative. Which problem does the digital euro solve?
Very good question, and in fact, this is also a question we get asked a lot, and the ECB gets asked a lot. To understand the motivation, I'll try to keep it brief. To understand the motivation from the perspective of the European Central Bank is to remember this initial Venn diagram that I showed you, because in the middle, between digital payments and sovereign payment methods, there is nothing. About 70% of the cashless retail transactions are processed by American companies, like Visa, MasterCard, and PayPal, for example. And that is, from ECB perspective, this is a threat to national sovereignty. So as of today, the only way you can get your hands on actual euros is if you have cash. But of course, cash usage is declining, except for in Germany, maybe. But the problem is you want to have something that works for all people in all of Europe. Full stop, yeah.
Okay. One more question.
Thanks. When you mentioned about the card or other form of digital currencies, and you mentioned that if you lose it, you lose the money.
Yeah.
Does it mean that there is no authentication on top of that before you can present it to the next person? Is it mandated in the rule book?
So the rule book the rule book is not yet finished. So I can't yet give you a definitive answer. But of course, you would still have something like a PIN protection on your card, right? So like you have with current credit card payments. But the key thing here is that the digital euro that's on your device behaves like cash. right? So the only difference is that you have an access mechanism, right? So for someone who wants to steal it from you, that person has no incentive to steal it from you because they can't use it, right? And we've also learned that in one of our pilot projects in Ghana, where people converted a lot more cash than we expected into CBDC, even illiterate people. And we thought, why are they doing that? And we asked them, well, if I put the CBDC on the card, it's PIN protected, no one can steal it from me. If I put it in my house, in cash, people can steal it from me, right? So there's still some kind of authentication mechanism, but if you lose it, you cannot prove how much money you had because you make private payments with these offline tokens.